affected by the volatility of the stock markets, picking defensive stocks for your stock portfolio gives you steady growth and earnings over the long run. Hello and welcome. I am Prarthana from Clear, India's largest tax and financial services platform. At Clear, we have assisted 6 million plus tax filers so far. If you have not already, do subscribe to our channel to support us. Stocks of well-established companies whose products and services are in demand across the year regardless of economic conditions are defensive stocks. Defensive stocks are less impacted by the volatility of the stock markets and provide stable returns irrespective of market conditions. It may not have aggressive growth potential but protects your stock portfolio from losing substantial value during a bear market. Defensive stocks are stocks of well-established large-cap companies with a history of stable returns for at least a decade. Moreover, these companies pay you consistent dividends over a long time. Defensive stocks are similar to a strong top-order batsman like Rahul Dravid called the Ball. Just as Rahul Dravid batted for a long time and saved the Indian cricket team several times against strong opponents, defensive stocks protect your portfolio from losing heavily when the stock markets crash. Market experts recommend that you allocate a percentage of your portfolio towards defensive stocks at all times. You need defensive stocks in your portfolio to protect your investments during a recession or extreme volatility in the stock market. If you are a conservative equity investor, you may have a higher proportion of defensive stocks in your portfolio. You may not get the massive gains of aggressive growth stocks, but defensive stocks perform in all economic conditions. If you are an aggressive investor, it helps to have a small portfolio of your stock portfolio in defensive stocks, which cushions you in a bear market. Moreover, if you are unsure of market conditions, consider defensive stocks to handle volatile stock markets. You can opt for defensive stocks if you seek regular dividend income. Many defensive stocks have a high dividend yield determined by dividing the dividends announced by the company by its share price multiplied by 100. Suppose company X with a share price of ₹50 offers a dividend of ₹1 per share. The dividend yield is 2%. Many defensive stocks have dividend yields of 6 to 7% and enhanced returns, especially when stock markets are down. I hope by now you have understood why you need defensive stocks in your portfolio. Comment clear if you are clear or drop your questions if any. When you pick defensive stocks, look for a strong brand name in a particular sector. Suppose you pick defensive stocks from the fast-moving consumer goods or FMCG sector. Companies such as HUL and Britannia are brand heavy and dominate this sector. You may pick top performing stocks from the healthcare sector. After the COVID-19 pandemic and increase in lifestyle diseases, the healthcare sector will do well over time. Look for defensive stocks with high dividend yields. These stocks tend to do well in a bear market. Pick defensive stocks that sustain growth and return on equity, that is ROE. Companies with ROE greater than 15% continuously over the last 5 years are a good bet. Defensive stocks typically have a low beta value, which measures the volatility of a stock relative to the overall market. The beta value of the market is always equal to 1. A beta less than 1 signifies lower volatility and above 1 signifies higher volatility. For example, HUL stock has a beta value of 0.68 and Britannia Industry stock has a beta value of 0.56. Asian Paint stock, a giant in this sector, has a beta value of 0.81. Defensive stocks may not see their value falling significantly in a bear market. Correspondingly, their value doesn't rise too fast in a bull market. If you are an investor who is looking for long-term steady returns without the hassles of price fluctuations, defensive stocks may be an ideal investment. Thank you so much for watching this video. If you have any queries related to investment and taxes, please do comment them below as we will address them as soon as possible. Stay tuned for more updates and don't forget to subscribe to our channel for more finance related content. Take care and goodbye.